connect with Chakri Lokapriya as well, who's joining in on the show to get in his take on the overall fundamentals of the market. Hi there, Chakri. So much to talk about, but why don't we start off by getting in your thoughts on ITC, in particular the commentary coming in from yesterday's conference call where Sanjeev Puri talking about how the company is going to continue to hold a 40% stake, and he's also said that the demerged entity is going to have a royalty-like arrangement to house other brands and assets. Your thoughts?
Indeed, this is the long-awaited demerger from ITC, and now it turned out that they're not completely divested it for various tax reasons. It leaves the new hotel business in at least with a cleaner balance sheet compared to, let's say, Indian hotels, which has quite a high level of debt. Because hotels have a space, any company which has hotels usually tends to have very high levels of debt because of the asset-intensive nature, which today this ITC's hotel business does not have, has a stronger balance sheet. Therefore, it allows it to therefore get a higher valuation if and when the balance stake is divested at what looks like there's no immediate time. It also allows ITC to deploy its excess cash flow from its cigarette business and to the hotel business and the other businesses. So I think, but it's all in the price. And so I wouldn't really buy ITC at this point.
Chakri, you think the market was right in punishing M&M the way it did for its stake buy into RBL Bank? I mean, yes, there are questions around capital allocation, but a 7% fall in M&M.
I think it's partly a couple of things. One is the stock has, had a very good run-up. It's outperformed the market by some 60-70% over the last several months. And second, M&M has always been a sum of the parts story. And the sum of the parts story kind of got dented because of this capital allocation. But capital allocation, in a sense, again, given that M&M Financial Services is still a NBFC, and there is lots of benefits from a bank in converting to a bank. I think that while they haven't stated why they are acquired, I think there is something clearly brewing. And M&M looks okay, but if you look at M&M's fundamentals, this XUV business bookings are coming down. Their EV strategy is fairly well articulated. So I think the stock is fairly priced at this point, and there's not much upside in the medium term.
Okay, so that's the take coming in on M&M as well as ITC, both that the upside is capped on both of these stocks given the solid run-up that we have seen.
Some of the other stocks are going to be in focus, and we've talked about Laurus Labs. Anisha as well flagged off that. And Chakri, this is quite the curious case, right? Their margins were at a multi-quarter low, also declined for a fourth consecutive quarter, but the management is confident of actually bouncing back, and so much so that they're managing to maintain their FY24 guidance. I don't know if you track Laurus closely or not.
Well, I don't track it closely. I think what is happening in the space is clearly it's become a volume business rather than a margin business. And still the market pie itself is very large, very underpenetrated market. So Laurus Labs, as well as its competitors, will continue to grow the overall pie, so therefore the volumes will come. But if you look at the margins of the business have been coming down, will continue to maybe stabilize at some point. So I think it's a volume game, therefore it will become a low multiple business. But clearly, I think they will reach their estimates given their volume growth.
Chakri, what's the outlook on IHCL? Having come out with a steady set of numbers, margins you could say was a bit of a disappointment, but overall they're talking about how their RevPAR, occupancy, ARR has been higher than the industry growth. Given with the kind of movement we've already seen in the stock price, what's your outlook on IHCL?
IHCL, again, a very similar story to the other hotel companies. The outlook for the rest of the year remains very strong. Both G20 corporate events and the upcoming wedding season towards the end of the year. All this will contribute both to the event business, to the hotel business, and the RevPAR is actually still if you compare it versus 3 years ago, it is still not up there. So given all this, I think, today their balance sheets are better than they were before. And despite the stock run up, some of it is in the price, but I think these stocks will steadily move up over time. There's no more surprise element left in IHCL.
The other group which is going to be in focus is the Piramal Group as well. Of course, the buyback opens today, and then, there were details coming in on Piramal Pharma as well. Just quickly bring up those stocks as well for you. Piramal Enterprises held out quite okay yesterday. If we can just bring up the 1 week chart perhaps. And then Piramal Pharma, wherein the rights issue price came about last evening at about 81 rupees per share, and it's a ratio of 5:46 that has been announced for Piramal Pharma. Now, Piramal Pharma, while in the last 7 days it's done pretty okay, a large chunk of the move has only come in the last 2 days when the street was pricing in or building in the rights issue post that announcement. These haven't been the best performing stocks, right? Liquid in nature, high beta in nature. Piramal Pharma, in fact, post the last quarter numbers, got really slammed as well. From there, saw a minute bit of recovery after last quarter's performance. And then now finally it's made it back to those 108 odd kind of levels. Chakri, what are you making of all the news flow that's coming out of the Piramal Group? The right noises?
Yeah, they are the right noises. There is a lot of, divestitures, deleveraging, which is happening within the group. I think now it has become more of an investment group rather than, a business focused group. So now I think the focus will shift to with all the deleveraging that has happened. What will they do with what will be their next investment and what will be the nature of that investment?
Sure, point taken. But the other stocks which will be in focus on account of earnings are quite a few actually. So apart from Ajanta Pharma, Sona, BLW, there are others also reported a decent set of numbers. And overall, Macrotech Developers was a bit of a mixed set because the pre-sales and all of that is very strong for the company. But it's of course not reflecting into the PL in the same way. Chakri, what would you do about real estate right now?
I think real estate, given that we are close to an interest rate peak, hopefully, and at some point later in this year, when interest rate starts trending down, that does just two things. One is it brings down the working capital cost for all the real estate developers, which is a good thing. And the second thing, it also helps potential home buyers with lower mortgage costs, also a good thing. So a combination of both, plus the existing inventory with all the developers, including Macrotech, it'll help them in accelerating offloading it, and that will clean up, help their balance sheets become stronger because there's further cash.
About the rest of the market, because IT stocks, they have been doing all right despite the weakness that we have seen. Intellect Design also came out with its numbers. Tech Mahindra, despite a very bleak set, managed to see quite a bit of resilience yesterday. Chakri, what about the IT pack? Would you look at buying whatever weakness is there in the market right now?
If you look at IT, a lot of it has been company specific weakness, whether it was Infosys or yesterday Tech Mahindra. Yesterday they had a specific client issues which led to both a revenue and a margin miss. And Infosys, it was actually, while they didn't point out individual clients, it was clearly something which was happening within their own portfolio base. And third, if you look at the overall, including the commentary coming out of the US, still a very strong economy, far stronger than expectations. And therefore, Fed continues its path of tightening rates, or at least maintaining a tough language. So as long as the tough language continues, I think IT will now take a back seat, and therefore I think at best it's a market exposure, but not anything beyond that.
What about your view on ACC? Brokerages seem to be, turning their view to neutral or an underweight rating post the kind of numbers that they delivered. Realizations have been a bit weaker. What's looking good within the cement space, and your outlook on ACC?
ACC numbers were actually, I think, very strong. Their volumes number were very good. There was a cost moderation, but the weakness has been in the price realizations. Now, this is something which has hampered the whole sector, not including ACC. And it's unlikely, I think, from the current environment that they will be able to increase prices. What, with costs coming down, input costs coming down, petcoke costs coming down, that will kind of protect the margin. So I think, these stocks will have to still wait and watch. But ACC, because of a lot of uncertainty around the stock, because of the Adani holdings, etc. I think now the stock had corrected. So I think you can probably accumulate ACC, but still I think it's largely has done its bit of running.
Morgan Stanley has maintained their underweight rating on ACC, the target price at about 1650. I think there's something wrong with that because 1940 is already where ACC is. So yes, they are, saying that the CMP is not justified and they do see a lower level on ACC. They're saying that realizations were weaker, the cash position moved down significantly or rather slightly in the on a sequential basis, and that EBITDA was much higher than expected, led by higher volumes as well as lower costs. So that's their take on ACC. Nestle, that's the other one which is in focus. In fact, not just Nestle, the entire FMCG pack as well is going to be in focus. Jefferies has come out with a note on Nestle after its earnings. They're saying that volumes were offset by margin expansion. The revenue growth was broad-based across cities and towns and also product segments as well. That they like the packaged food story, but valuations are expensive for Nestle. More importantly, I think Nestle global earnings were out, and I think that is a bigger talking point because it's a 9% hike that they've actually undertaken, and considering at a global level, this is one of the largest packaged food companies. Nestle is what I'm talking about. So for them to actually absorb that kind of inflation and pass it on to the consumers with a 9% price hike across their product categories, that's something pretty big. But Chakri, what is your sense on, where the prospects of FMCG may be headed? And just in light of the commentary from ITC, the commentary coming in from Marico, and then yesterday on Nestle.
You look at Nestle, Unilever recently, a few days ago. It's a very similar story in terms of, there is not much of, and they're not able to pass through much of the price increases. And I think that's partly understandable at this point in time because, consumer confidence, consumer buying has kind of dipped in the last couple of quarters. And so I think they would rather focus on maintaining market share. So with the stocks already trading at 60 times plus, I think, this is a time to remain on the sidelines and not make any fresh buying into a Nestle.
Chakri, but I wanted to get a sense of, what you're making of the PSU stable right now, and especially the news flow on RVNL. We just talked about that, but investors showing this kind of interest on day one. The bids are going to be open for retail today. The share price fell 7% yesterday, but for all those who've completely missed out on this, railway and defense rally, what are the stocks that you're going to pick out for them? And would RVNL be one of them?
We've been talking about this. The one thing which is happening in the space is if you look at wherever there has been a government, state government or central government infra spend, those companies have actually benefited, whether it is Titagar Wagons, Mazda Tech, Mazda, or whether it's even L&T, Bharat Electronics, including the power finance companies. All these companies are benefiting from government orders. Now, RVNL has had a fantastic run. Now, the office was fully subscribed or will be fully subscribed very soon. After that, the stock will kind of do its, it'll make about a 20% from here on. So still looks good, but not the kind of dream run that it's had over the last 1 year.
Good to have you on board, Chakri. Thanks so much for taking time out and joining in with that take. Let's